Hey everyone, welcome back to Corporate Decoder, the place where we take a look at the sometimes confusing world of corporate filings. Today we're diving into a recent report from American Rebel Holdings. It's a bit of a roller coaster, so buckle up. It involves debt, stock, and a possible warning from the stock market. Almost sounds like a country song gone wrong. American Rebel Holdings just filed what's called an 8K. This is basically a quick update for investors about important things that have happened recently. Think of it as a corporate news flash. First up, let's talk about an agreement they made to deal with some debt. They have what's called a promissory note, which is like an IOU for a little over $1 million. Now, they're making some changes to how they plan to pay it back. Back in November, American Rebel tried to pay off a small chunk of this debt, about $150,000, by giving the lender some of their company stock. It was like trading debt for ownership in the company, but the deal fell apart when the purchaser cancelled the exchange. Now, they've made an amendment, which is just a fancy word for a change to their original plan. This gives the lender more time to buy parts of the debt from another company and trade it back to American Rebel for stock. So the lender can buy more of this debt and then trade it to American Rebel in exchange for company stock. The amount of stock they get depends on the stock price at the time. It is calculated using the average stock price in the few days prior to the exchange. There's a limit to how much of the company the lender can own. They can't end up with more than about 5% of all the company's stock. This is to protect the company from being taken over without their approval. The company also said they won't issue more than about 20% of their currently outstanding shares to pay off this debt, but they have a backup plan where shareholders already agreed to allow them to go over 20% if needed. For a short period, the company and the original lender agreed not to change the original debt agreement or make any payments on it. This gives everyone time to sort things out. Now for something a little more serious, American Rebel received a warning from the Nasdaq stock market where their shares are traded. Nasdaq said the company isn't meeting one of their rules because the company's total assets minus its debt, also known as stockholders' equity, wasn't high enough. Basically, they need to have more assets than debt to stay listed on the stock exchange. And at the end of September last year, they didn't meet that requirement. The company's total assets minus its debt, what is called stockholders' equity, needs to be above $2.5 million. If it is not, Nasdaq could remove the company from the stock exchange. As of today, the company does not meet the other ways to prove they should stay listed on the Nasdaq. This warning doesn't mean American Rebel is immediately getting kicked off the Nasdaq. They have some time to fix the problem. They have about a month and a half to come up with a plan to show Nasdaq how they're going to get their finances in order. If Nasdaq accepts their plan, they'll get extra time, almost 6 months, to actually fix the problem. If Nasdaq doesn't like their plan, American Rebel can appeal and have a hearing to argue their case. Moving on, American Rebel sold some of its stock without registering it with the Securities and Exchange Commission. They issued 120,000 shares of stock to Silverback Capital Corporation, or SCC, as part of a settlement agreement. Shortly after, they issued 125,000 more shares to SCC, representing a payment of just over $92,000. They also issued over 78,000 shares, as we previously mentioned when talking about the debt. The company believes they didn't need to register these stock sales because they were private transactions. Finally, let's talk about some good news. American Rebel put out a few press releases about how well their business is doing. One of their subsidiaries, Champion Safe Co., is doing great, beating sales goals and bringing in millions of dollars. American Rebel Light Beer is also expanding, getting into more stores across the country. The CEO went on a TV show in Kansas City to talk about the company and its products. It's important to remember that these press releases include forward-looking statements, which are basically guesses about the future. Things might not always go as planned. So what does all this mean for American Rebel? Well, the debt situation is a bit complicated, but it seems like they're trying to manage it. The warning from Nasdaq is definitely a concern, and they need to act quickly to avoid getting delisted. However, the positive news about sales and expansion is encouraging. From a stock perspective, American Rebel is a bit of a mixed bag. The company has some strengths like expanding product lines and increasing sales, but they also face some real risks, like the Nasdaq delisting and the amount of debt they owe. Because of these factors, it's hard to give a strong recommendation. A lot depends on whether they can get their finances in order and convince Nasdaq that they're a viable company. If they can turn things around, the stock could have some upside. If not, it could go lower. So for the company, I'm leaning slightly bearish. A reasonable target price range would be between $1 and $1.50. Thanks for watching. If you found this helpful, please subscribe for more corporate decoder videos.